speak, but for those joining, this is Taylor Parker, um, a longtime childhood friend of mine who grew up with me in New Milford, and we played football together growing up. We went to school together, and then up until what grade did you move away, would you say?
I want to say, I think it was fifth grade I moved away. Fifth or sixth grade. I want to say it was sixth grade I moved away.
So you didn't move straight to Texas, right? You went somewhere in between.
No, so from New Jersey, I actually moved back to New York, and then from New York, I moved to Georgia.
And then now in Texas, where you are with your wife and your daughter, right?
Yeah.
Awesome, man. So the journey the journey is long, but we're still, early on in the journey, man. It's really great to just kind of connect with you again. We've been in contact over the years, but it's always great to chat with you and see what you're up to. We have a lot of similarities with the work we do with youth. And, that's a whole other topic for discussion. But for tonight, I really wanted to pick your brain about, you know, mortgages and the financing world that you're in when it comes to real estate. So can you share with us a little bit about what your role is in as a mortgage advisor?
Yeah, absolutely. So, pretty much, what as a job as a mortgage officer, what we do is help clients get their pre-approval for a home. So, realistically, that's probably like the first step you want to do when it comes to buying a home is making sure your financial assets is where they need to be so you can go and purchase a home. So, where we come in is we're going to not only check your credit, but if your credit's not up to par, we're going to have programs to help you build your credit to get you pre-approval. Now, within getting pre-approval, you have to understand there's different loan types. There's different down payment programs, and then there's going to be different loans. So just depending on a person and whether they're in military, whether they're on disability, whether they have a self-employed job or a W-2 job, it's all different. So where we come in is just make sure you have the right loan that's going to utilize you for, get you into your dream home or your first home and just the right program for you.
So if I'm a first-time home buyer, I call someone like you up. You work for yourself or you work for an agency? How does that work? Do I find a company?
So you have different aspects. So some people, they'll work for the bank. You can go to your regular bank or a credit union and find a loan officer and get help. You can find a brokerage and get help. You can find someone like me, which I work directly for a broker, which is Security National Mortgage, and get help. Good thing about me is I'm not limited to the area I am. I can work. The only states I can't touch is New York and Philadelphia,
Hmm.
but I can touch any other state, including Hawaii.
Now, is there a benefit for someone to go with their local bank versus going with someone like yourself?
So when it comes to going to a local bank versus like a competitor that's nationwide, sometimes local banks they do have the opportunity to have sometimes lower rates than we can, only because they have certain benefits as far as what you would call the term is buying down on rates, right? So when a client can buy down on rates, sometimes a company can match like their commission or they can match to help a client reach a certain rate. And that's going to be the aspect when it comes with relationships between you and the bank or how outreach the bank is and their resources are. And then also other banks can brokerage a loan to different banks if they can't reach that. So to help a client, you're not necessarily limited. It's just, the bank criteria and what they can do and what their limits are. And then every city is different depending on zip code.
Gotcha. So, in terms of working with you, like if I were a first-time home buyer, right, and I
Hmm.
get in contact with you as my loan officer, what are some of the first things you're going to ask me as a first-time home buyer who's never, spoken with another mortgage, sorry, officer
Hmm.
before.
So first thing we want to do is just make sure they feel comfortable. You want to make sure that you're going to hold their hand throughout the whole process and make sure that, hey, you're here to help and guide them through every step of the way until they get actually into closing. So what we're going to do for them is going to build them a profile just to see where they're at. So that's just the minimum information such as, income, where you've been renting or living with family, how long you've been renting, how long you've been living with family, how long you've been with your job, if you're self employed, if you're not self employed, if you're coming out of school and just got a job. So, those are the little things that we're going to help you build first. And then, upon that, everywhere has a criterion level. So, FHA right now is offering at 580 credit scores where you're able to start getting homes. Just a while ago, you weren't able to get a FHA unless you had a 620 or 640. So, the good thing is, FHA now, you can now start getting at a 580 score. Now that's different too because people think because I can get an FHA loan, that means I can qualify for a down payment assistance program. So we have to educate our buyers and our people who want to get money because you have to have at least a 620 to qualify for a down payment assistance on top of that. So what we're going to do is tell them everything that entails with an FHA, how it works, and then still prep them for closing. Because what they don't tell you, sometimes you think you can just buy a home, but no one knows about closing costs. They don't know anything about escrow. They don't know anything about down payment. So for them, they jump into something and then they feel like I'm way over my head in this. So that's where it's very important to have a loan officer because they can help you in every step of the way and tell you these things and what like escrow means, which people don't know that's your taxes on your home. So things like that, that's what you want an officer for or stepping into a bank so you can get further educated on before you just say, hey, I want to buy a home. It's more than just putting money in the bank too because you have to be able to access that money in order to put in a house. You can't have under the mattress money and use on your property.
Right. So that's a good way to segue into my next question because I know a lot of people out there, including myself, have different sources of income, and
Hmm.
whether it's coming in from, cash businesses or 1099s or combination of 1099s and W-2s, combination of all the above. Some even
Hmm.
over the last year, unemployment. Like having that money come in. So. Uh, what do you have to say for the people who are concerned about their income being in multiple places and where did it come from? Should they be concerned and start to get themselves set up properly with a W-2 job or a 1099 job? What do you advise us right now?
So there's so many different elements of where your money is and how to utilize it. The first thing you need to understand and learn is if we can't prove it, we can't. So what you want to learn about is even if you have your money in your stocks, as long as you are able to print out some kind of form of document saying, hey, my money is here, this is how long it's been here, then you can use it. Even if you're going to use money from someone, it has to be utilized or shown as a gift or something. That way it's shown like, hey, I'm not just pulling this money from anywhere, you know, anywhere magical and trying to use it to buy a home. So let's just say you are self employed. As long as you're self employed and been filing for your taxes, you are able to use that money. If there are some cases though where we can use your money if you're just self employed for 1 year and you haven't filed for the next year yet, and we can use something as like what is called a bank statement loan. So bank statement loan is where you can 12 months of bank statements, as long as you've been inputting that money and showing where that money is coming from, we're able to still get you a loan. So what you want to always think of is just, am I able to prove this income?
So having the money, like let's say you have a cash business, and on every Friday, every week, every Friday, I deposit, whatever came in that week. As long as I'm able to show that bank statement of consistent cash coming in, then I could use that to verify my proof of income is what you're saying.
As long as you can prove you have a reputable business, that means it's registered with the state. You have a business account, and you're showing that you're actually putting money into that. Yes, you can.
So this is a big message to all of our, cash business people, people who are self-employed, right? So really, if part getting a home is on their, um, their vision board or whatever, down the line, making sure that they have this at least set up for at least 1 year is so important, right?
Right, right. Because you have a lot of people come from a W two, go into self employment, and then realize they can't buy a home until they have 2 years to at least prove that that business is a successful business and can continue to bring money in.
Okay, cool. So, what would you say for someone who's maybe now has their first home
Hmm.
and now they want to maybe purchase an investment property? What are some of their options in terms of refinancing and whatnot?
So refinancing is always, it could be
Thanks
a
for
good. Sometimes it could be, it doesn't make sense. It just depends on, the equity in the home, what you bought the home for, and are you ready to take on a second home. Now, all investment properties, you have to also understand, you also need to be prepared to also always put down 20% on an investment property. So, and it has to be a certain range away from your primary residence in order for it to be an investment property. So when you're looking at refinancing a home, you want to make sure that your equity you're pulling out is enough to maybe cover your down payment, maybe get consolidate some debt, and want to make sure that even though you're getting a second home, it's still going to line you up with your debt to income ratio. Now, banks are going to look at your debt to income ratio, which means how much debt do you have out there? How much debt, including cars, credit cards, your mortgage already, if you have other assets or other properties or other stocks out there, and what you're going to be doing with them to make sure that you can pay for all of those things.
So once you kind of reestablish that, are you and people can now take money that take that equity out and then put it towards purchasing another property and kind of repeat that process on and on and on, right?
Right.
And does that stay?
So you
Yeah.
have big investors, what they do is they get their first home, right? They'll refinance that home, get a second property, and do the same over and over again. The good thing about utilizing refinance too, you can not only change the term of it, but you can lower your term, take the money out for your second home, buy your second home, rent it out. So now you have your second home being paid for, refinance your second home, change the term, lower your rate on it, and do the process all over again.
Love that, and that's definitely something I plan on utilizing in my investments. Can you talk about? I think we're losing you for a sec. Can you talk about the rates right now? I think we lost Taylor for a moment. Thanks for joining us. Thanks, Luke. I know I look like Harry Potter. Pretty cool Harry Potter over here. Gerardo in the building. Toast. I think we lost Taylor. Just ask him to join back again. We're back.
Hey guys. So you said rates before I got cut off, right?
Yeah, like what's it looking like for people who are kind of on the fence right now? I don't know if you can advise people on this or not, but just talk us about like what the rates have been and where you see them going.
So we're in the economy where everything's fluctuating, from your house markets to rates, everything is just fluctuating. So that's just going to be the process of right now, and there's nothing anyone can really do about it but sit and wait. So if you're just sitting waiting just to decide rates are going to go down or improve, there's really no true answer or savior to that. Rates, though, can constantly fluctuate just day to day though. So today it can be extremely high, tomorrow could be extremely low. So, but that doesn't mean you can be locked into a rate. Purchase a home 6 months to 8 months, or even a year, you can refinance out of that rate, depending on what type of loan you have. So, if you just want a home just to start with and get into a home, rates may not be the biggest thing that's going to be important to you.
Um, but I guess in terms of like the overall picture, rates are considerably lower now than they have been in the past, or maybe they're starting to creep up. Where were rates at when you kind of first got in the business, and where they're at now, and what do you see?
So, rates were actually at a historical low just 2 months ago, the lowest they've ever been for years. Right now, rates have typically skyrocketed. They're not as bad as they were back in like 2018 when the whole 2000 sorry, when the whole world whole real estate market crashed. It's nowhere near there, but they are at a high right now. But you see constant fluctuation between day to day. Rates can be low one day, and then the next day rates can be high again. So it's one of those in between things. You have to catch a rate when you can and lock it in when your officer or your person is telling you, hey, I want to lock today because rates can go up just tomorrow.
So what's that fluctuation look like? What are those numbers? Can you speak on that?
So you're seeing rates anywhere from low twos to low threes. Want to just give a rate or lock it, say, hey, quote you a rate, when realistically, rate has to deal with more than just a person's credit, a person's profile. Rate can just deal with the market itself on how it is on a day to day.
So, in terms of the highs, I guess you would say for now. I mean, mid threes, you'd say it's going up that high at all?
I would say so.
So, in terms of the grand scheme of things, is now probably a better time to buy? Would you say because of these rates? Are they anticipated to go up? Because I know in like real estate, they're looking at the market to go up still, and at least another five.
Right. I'm looking at the market all around. I feel like everything is gonna go up. We don't know what's gonna day to day, like what's going on all around. So when you're looking at just real estate aspect, you're seeing how much houses are costing. You're seeing a 2 bedroom as much as a 5 bedroom, right? You're seeing 3 bedrooms as much as 6 bedrooms. So the same thing with rates. You're seeing it at like, hey, rates used to be low. Hey, can I get a 0%? Can I get a low 2%? But now you're seeing threes and fours all over again. So if you find a home or find something, and officer is telling you, hey, we might want to lock in rates today, that's going to be your best bet because rates can, for instance, we had a client that we said, hey, we can lock you in at maybe like a 2.3, but the next day, because they didn't lock it in, hey, the rate was higher. So it's just one of those things to where we have to constantly watch the market, and even if you're a consumer, you're going to want to constantly watch the market.
What are some resources for people, in your opinion, for they can watch the rates, the market, the interest rates?
Yeah, you can go to like you can. So there's a website. You can even go to our website. You can go to any website, or even like, let's just say you're a person who wants to go to your bank. You go on your bank's website, they'll always have an update on your rates. You can go to your broker's website and always have an update on rates and the market and everything like that. If you're a news person, they always touch on the real estate and the rates and where they're at and what's going on in the market today, such as, hey, rates are going up today or rates are down today. So those are just few little things. You can always go to like FHA.com. You can go to like a mortgage calculator and kind of indicate where rates are. So there's so many aspects you can do. You can even Google like, hey, how are rates out there? Now they'll take you to like a bunch of places like Lending Tree or Quicken Loans and things like that. But they're always an indication to where loans and rates are going to be at the moment.
So I want to ask you a question, and I'm going to use myself as an example. Let's say I'm brand new into real estate, and as far as career wise, right? And so this is a new job, so to speak, for me, right? New 1099. And so is it possible for me if I could put money down, would I still be able to qualify for an FHA if you know how the real estate game and the independent contractor game is like it's not like you're getting a paycheck every week, whereas like you might get one paycheck every 3 weeks or every 2 months. It varies in real estate. So if you don't have to show for a long history in a new career, can you still qualify for these things like the FHA?
Yeah, so now FHA, I mean, of course, you want lenders are going to make sure you can have assets to always cover your liabilities and your home. So FHA, when you can get into FHA, I'm sorry, I might get dark on you guys.
You're good.
So an FHA, right, program can entail, like I said, we're going to help all of our users get up to at least a 620 to qualify for like a down payment assistance program. So when you have a down payment assistance program, that's money you do not have to pay back.
Wow.
So you're having a down payment assistance you don't have to pay back, so you don't even have to worry about, hey, do I need to save up some money to put down for a certain amount? Sorry guys, you're gonna hear my daughter.
What's wrong?
Apparently her Cheetos fell.
I'd be crying too. So you're saying that you don't have. So how do you qualify for this? Do you have to make a certain amount of money per week? Is it some like how do you qualify? How do you make sure that you're someone that can get access to this down payment assistance?
So typically what you want to do is at least have $3,000 in income a month before taxes. You want to at least have a 620 to a 640 just to be able to qualify.
And then it's a matter of finding a property and kind of going off of that.
Right. Right. And then you want to be able to have at least 2 years consistent of income at your job time, whether it's you're working for yourself or a W-2 employment.
Okay, so if someone like myself who just got started in real estate, I wouldn't be able to prove 2 years of income, so I would have to wait.
Unless with your previous employer you at least had a year and we can at least prove, like, let's just say you've been doing real estate for a year, right? That's when we can prove, hey, he's been doing this consecutive for 12 months. We can do the bank statement loan at that for you.
Okay, got it. So what are some other strategies first-time home buyers or people who are looking to get into the real estate game, in your opinion? What are some strategies that you would either recommend or kind of make people aware of?
So there's a lot of programs out there where I don't know if people know, but there's a lot of renters that what they're doing now is making you be able to qualify with your rent for credit now. So if you're renting right now, you always want to see if you're with like a property to see if they can report that for credit purposes. So anything they can report, because a lot of times people just don't have anything on their credit, maybe just student loans. Also, a good thing to know is student loans don't necessarily count against you as far as buying a home. Student loans or medical bills can be overlooked. But the problem is if you don't have any other additional credit outside of that, that's where we're going to tell you, hey, we need you to build some credit. So anything like cell phone bills can be applied for credit. Anything for like rent, if you're paying rent right now, can be applied for credit. But we would just have to tap into those resources to see if we can get them counted for record, and that way we can get your scores up.
So your business is more holistically on the financial education piece too, because you're also helping people get their credit right, which is
Right, right. So we're not just getting people the loan. We're literally say, hey, seriously, hey, you came today, came to me, we build your whole profile, and let's just say, hey, you came in at a low score of maybe a 540 or 520. What we're gonna do, not unlike most companies, we're gonna say, hey, let's go ahead and help you build your scores up and get you approvable. So not only we're building that relationship, but we're actually helping our clients build their credit. So not only if they build their first home, they can build their second, third, or fourth home with us because they know that we'll have their backs through the whole thing.
Mm. Awesome. So if someone's watching right now and they want to be able to get in touch with you, they're looking to get to a pre-approval process, how can they find you?
So you can find me through our portal, our www.snmc.com, our portal, or you can contact me at my office number at 512-954-9822. And you can always Google Security National Mortgage. We're located here in the Austin area. We're the headquarters over here. So we are the main office in the main region over here.
Awesome. I'm going to include that info once. Sorry, my phone is bugging now. I'm going to post that info when I share this. Um, is there anything you want to kind of send everyone home with? Any last pieces?
Yeah, absolutely. I would say don't be afraid to take that step because you have to at least know where you stand when it comes to buying a home. So even if you're not there yet, you at least know the steps that it will take to go into buying a home. Especially if that's your end goal, never be afraid of the step because if you don't know where to start, you won't know where you're going.
Mm, love that, man. Just having a vision and having a plan. That's what it comes down to, right?
Absolutely.
Well, I don't want to take any more of your time. I appreciate you jumping on and reconnecting, man. It's always great to speak with you. Um,
Always.
appreciate you, and I know we're going to be doing business again or in the future together for sure.
Absolutely. Question to you, Will. Do you have any loan officer partners that you're establishing yet as far as you being on the real estate side?
I mean, as far as loans and mortgages go, I am in contact with a couple different lenders.
Hmm.
Um, but as far as that goes, yeah, I just try to give my clients as many options as possible. So yeah, always looking to connect with people and definitely, yourself as well. We can definitely work together on something. Hopefully.
Absolutely. Absolutely. Just a trick of the trade shortcut. Just always want to make sure when you're dealing with buyers, you have a buyer in front of you for time's sake's consumption. Because, you can show 10, 15 homes and then realize you don't have a buyer on
Right, that pre-qualifying your buy, right?
you. Absolutely.
For sure, man. Yeah, I'm sure we can go on for hours here, but I definitely want to be mindful. I know you're with your family, so again, appreciate you, brother, and look forward to speaking again.
All right. Have a good night, Will.
All right, you too, man. Take it easy.